Welcome to Balance of Economy. Before we dive into the data, please note that this is market research for educational and informational purposes only and does not constitute financial advice or recommendation to buy or sell any asset. Let's look at the numbers. Okay, today we are pulling back the curtain on one of the most watched and, let's be honest, most controversial portfolios out there. We're talking about the Pelosi Index, and we're going to break down its 2026 strategy, move by move.
Let's just kick things off with the number that stops everyone in their tracks. 41.7%. That's the return this portfolio pulled in between January 2025 and January 2026. I mean, that is just an absolutely massive number.
And to put that into perspective for you, look at this. The S&P 500, which is our benchmark for the entire U.S. market, had a great year, pulling in a solid 20.3%. But this portfolio, it more than doubled it. This isn't just a little bit better than the market. This is an entirely different league of performance. So you gotta be asking yourself, right? How is this even possible? How does a portfolio consistently crush the market like this? Is it just incredible strategy? Is it impeccable timing? Or is it something else? Well, let's dig into the data and see what's going on under the hood.
All right, so what's the blueprint? What's the secret sauce here? Well, it's pretty clear. The entire foundation of this portfolio's incredible run boils down to two letters: AI. This isn't a diversified, play-it-safe strategy. It is a highly concentrated, you could almost say all-in bet, on the artificial intelligence revolution.
And hey, don't just take my word for it. This right here is a snapshot of the portfolio's own strategic breakdown. You can see it clear as day, a confirmed tech overweight status. And the primary drivers, they're labeled tech titans. This just screams an aggressive, full-throttle, tech-first approach. And when we drill down into what those tech titans actually are, the concentration is just staggering. I mean, look at this. Over 70% of the portfolio is crammed into just 5 companies. And it's a who's who of big tech: Google, Apple, NVDA, Microsoft, and Amazon. These aren't just tech companies. They are the absolute pillars of our modern AI infrastructure. And what's so smart about this is that it's not just about betting on the next flashy AI app. No. This is a classic picks and shovels play for the AI gold rush. You've got the king, NVIDIA, making the chips. You've got Broadcom doing the critical data center networking. And then you have a more speculative, forward-looking bet like Tempest AI, which is taking AI straight into the world of medicine. It's a really comprehensive approach. So that's the big picture, right? The AI foundation. But what about the recent moves, the tactical adjustments that keep this engine running? Let's get into the nitty-gritty of what's been happening in 2026. All right, here's the transaction log, the real meat and potatoes. We see them doubling down on the big guys, Google and Amazon, by exercising options to grab more shares. But check out that new name, a huge direct buy into AllianceBernstein. That's a financial services company, and it signals a potential new rotation. Okay, I know what you're thinking. AllianceBernstein, okay, but Vistra, an energy company? What is that doing in the middle of all this high-tech AI stuff? It totally looks like the odd one out, right? Well, stick with me here, because this move might just be the most brilliant part of the whole strategy. Here's the thing you have to understand. AI is hungry. I mean, insanely hungry for electricity. All those massive data centers humming along 24/7 with thousands of GPUs, they drink power like you wouldn't believe. So the Vista play isn't really a bet on energy. It's a bet on the power grid itself. The very thing that makes the entire AI revolution possible. It's a genius supporting move. Okay, so we've covered the what, the AI stocks, the energy play, but the how. Well, the how is where things get really interesting. This is the secret weapon, the financial engine that turbocharges the whole thing and generates those eye-popping returns. And that secret weapon is something called leaps. Now, don't let the name intimidate you. It's actually a pretty simple concept. Think of it as a call option, which is just a bet that a stock will go up, but with a really, really long shelf life. We're talking more than a year, sometimes several years out. It lets you control a huge amount of stock for just a fraction of the cost. So how does this actually work? It's a pretty slick 3-step play. First, you pick a monster, a too-big-to-fail industry leader like a Google or an NVIDIA. Second, instead of buying tons of shares, you use leaps to control the potential upside with way less cash. And third, and this is the magic right here, you use leverage. Because of how these options work, a small jump in the stock price can lead to a massive percentage gain on your leaps. It's aggressive, for sure, but it's designed to absolutely maximize your returns.
This all begs a pretty big question, doesn't it? How in the world do we know all these details? How is this incredibly specific strategy just out there for everyone to see? Well, the answer is all about transparency laws and, more importantly, how the market reacts to them.
The reason we have all this data is a law called the Stock Act. And it's pretty straightforward. It says that members of Congress, along with their spouses and kids, have to publicly report their stock trades within 45 days. Plain and simple.
Now, here's where it gets fascinating. The whole point of the law was to build trust and prevent potential insider trading. But what's actually happened, the market has turned these disclosures into something else entirely. Traders and data platforms now follow these filings religiously, treating them like a crystal ball, a leading indicator of where big money and maybe even policy might be heading next. And that right there is how the Pelosi Index became, well, a thing. It's not an official fund you can buy, of course, but it has become this phenomenon that people follow obsessively. For a lot of folks, it's a real signal in the noise, a benchmark all its own. That's the data for today. Now, I want to hear from you. Is the Pelosi outperformance a result of superior strategy, or is it a signal that the game is rigged? Drop your thoughts in the comments below. Don't forget to subscribe to Balance of Economy for high-density market insights. Stay sharp and stay informed.